Hello, everyone. I'm Leslie Kaufman. I'm with Bloomberg Green. I'm a senior reporter covering both sustainability and climate issues, and I'm thrilled, therefore, to be with you this afternoon to talk about the financial case for sustainability. As we all know, ESG funds have been growing like crazy, which shows that investors and businesses increasingly understand that there's a link between sustainability and financial performance. But how do company officers really put that together? Today, we're very lucky to have with us two senior people who have worked on this and thought on this deeply. I'm happy to introduce Barry Parkin, Chief Procurement Officer and Sustainability Officer for Mars, and his partner, Claus Aagard. I hope I pronounced that right, Claus, who's the Chief Financial Officer for Mars. I'm hoping you two can speak a little bit, tell a little bit about your background in sustainability and your time with Mars. And Claus, maybe you could pronounce your last name for me a little bit better. Barry, you want to go first?
Sure, and great to be on here. Yeah, just a very quick introduction. I'm a Brit living in the US and a lifer at Mars. I've been there for 35 years, so a career through supply chain roles and a variety of other things as you do in a corporate. But I guess procurement's been the core of my experience, and that's what led me to sustainability as we started to really uncover what was happening at the front end of our supply chains. And, food business, based on farming, there's 1 million farmers that supply us and from all over the world. So our challenges are very much upstream in sustainability, and hence the reason that we've put procurement and sustainability together. If we're going to solve the sustainability issues of our business, we have to change what we buy or where we buy it or how we buy it. So we've got to reimagine and redesign supply chain. So that's my role.
Okay, Claus, do you want to say a little bit about yourself and correct the pronunciation, my pronunciation of your last name?
Thank you, Leslie. Well, you can have the Danish version where I'm from, or the Germanic version, or the English version, which I'm using a lot. So I normally say Aagard, so you got it pretty right. So, but I know it's confusing with 4 A's in there. I've been with Mars for almost 20 years. I spent my life also prior to Mars in finance and strategy roles. And so while I am the numbers guy and I like profits and cash flows, I've always been a great believer in the systemic or the system of business and how things hang together, and also the concept of a broader stakeholder set that you need to really satisfy in order to have a business that is durable and sustainable. And it's one of the things that has always attracted me by being here at Mars.
Well, so both of you talked about something that you guys have put in place that helps the company achieve both sustainability and financial, which is you've been there both for a very long time, but only recently did you roll out the new Compass plan. I was hoping you could talk a little bit about what that is and why it's important.
Yeah, I can kick that off, and maybe Barry, you can talk about our sustainability plan, which is actually, much longer in the making. So about a decade ago, actually almost 15 years ago, the business asked itself, actually provoked by the owners, the Mars family, really the question, well, what's the right level of profit for a company, particularly in a world where, as we do believe strong in sharing, mutual benefits, what's the right level of balance of profits between us and the stakeholders around us, whether that is upstream, downstream, all the way to the consumer? I think probably a bit of an unusual question all that many years ago, but as we think about today's world, I think about it as a rather existential question. Because if we don't get this balance right, we will not have a business that will endure. So as a CFO in today's reality, we have a beautiful or less beautiful collision of crisis, whether that is COVID-19, social injustice, and clearly an alarming climate crisis on our hands. I'm focused very much on driving what we call purpose-led or holistic value creation here at Mars. And we've codified that in what we call the Mars Compass, which is a set of shareholder objectives agreed with our shareholders. And and endorsed by management and our board that really brings together both financial and non-financial objectives. So yes, it is about good returns. It is about a portfolio of businesses that are driving sustainable growth. But we are also very focused on the societal impact, the positive societal impact we have, and being a trusted partner. And I find it a very congruent set of objectives with a lot of tensions built into them. So if you don't do one of them, we believe very much this flywheel that we are driving will fall apart. If we do one of them.
Get very specific. Can you give us some very specific examples of how Compass works? We talked about a little bit about how remuneration works, but there might be some other examples of two goals that might work at odds, and how do you bring them together?
Yeah, so just this week we are discussing our execution plan for 2021 and the following years with our board. And I think what is really important is that we, in our resource allocation and in the way we are planning what is the right level of cash, surplus cash versus what we're investing, that we are showing a good balance and not just focusing on financial returns at the cost of, say, positive societal impact. And we have, as Barry can talk about, a number of things that we need to achieve in order to do our part in both social aspects and climate aspects, and making sure that we get that balance of investment right is what we're discussing just this week, for instance.
Barry, I'm hoping you can give us some really good specifics on how this works. I mean, those are some great general principles, but I'm wondering how this works in more specificity. And maybe you can even talk about something like COVID, which is obviously the crisis that's going on right now. And we're trying to figure out, how does Mars, give me an example of how Mars is doing societal good, and also putting societal good into its plan while also protecting the financial end.
Yeah, let me give you a very specific example of something we launched and talked about just a month ago. Palm oil. It's a critical ingredient. Half of the products in any supermarket, not just food products, contain palm oil. On the one hand, it's a fantastically productive ingredient. On the other hand, it's driving mass deforestation. So there's a real dark side to palm. So we've spent 3 or 4 years reimagining, redesigning that supply chain. And we've got to the point where we are completely confident we're completely separate from deforestation. We're deforestation free, the first big corporate to do that. And we've done that by massively simplifying our supply chain, going from thousands of mills supplying us down to a handful. And that's taken us 4 or 5 years to work through. And that's great for the planet. Clearly, we're not driving deforestation, but interestingly, it's also saving us money. And this is where the magic happens, where we radically redesign a supply chain to deliver both positive societal impact, which we all care about, but also financial performance, which Klaus in particular cares about. And that's when the magic happens, and when he and I get on really well when we do that. So we're looking for more and more of those opportunities. I think where Klaus and I have partnered really strongly over the last few years has been on renewable energy. We've been rolling around the world doing 20, 25-year deals on renewable energy and saving money every time we do it, saving money versus fossil fuel. And again, that's where the magic happens, when we can do that, when we can achieve that positive societal impact and save money. And I think we've got lots of examples where you do that, but it's also true that you can't always do that. And sometimes we've got to invest ahead of the curve in the belief that we're going to get a return in 10 years, 15 years time. And that's where I think the compass really helps us. It helps us to have the conversation with the shareholders about a return that may not happen for 5, 10, 15 years. And I think that's where one of the big benefits of being a private company, where we can take a longer term view of the return on the investment.
Yeah, I mean, I'm getting some questions from the audience, but so I don't want to lose them, but I do want to just pick up on that thread of being a private versus public. And I'm hoping you can talk a little bit more in detail just to explain what Compass is, but also answer the question of whether you think it would be possible to have that kind of policy in a public company, or is it only possible in a private company?
I can kick this off. I'd like to believe that it has to be possible for both a private and a public company. And I certainly feel that the wind is changing in that direction. But hey, I'm CFO of a private company for a few years now, so that's what I can talk best about. I would say on investments in general, and when I compare, obviously one of the benefits of a private company is we can choose to decide if we have at least a decent, solid financial foundation when we want to make our investments. We are not bound by quarterly reporting, and the stock market in that sense. What makes it challenging, of course, as a private company is, I often say that, we have to do things to prove what we are doing. We cannot talk about it. Whereas if we're a public company, the stock price and what people think about you in that world, at least, is often driven by the expectations of future cash flows. I'm very much judged by what we're doing right now. So I think the benefit we have is we can put the money at work when we feel it's the right thing to do, and we can decide to take X quarters of headwinds because we're investing in something, or we can choose to do the kind of projects that Barry described that has got much more long-term impact on our business. So I think there are some benefits there, and maybe sometimes some disadvantages as well. But it's got to be possible for everybody to follow those same principles. And I think some of the movements we see in the financial market is going in that direction.
Barry, do you have any thoughts on the private versus the public? In particular, are there things that you can't do as a private company that you wish you could?
I think in general it's a benefit. I know certainly my peers in other companies look at me with envy sometimes that I've got both a principled set of shareholders and a small group of shareholders, and those that are in it for the long term. So I think that does create opportunities for us to make some decisions that others couldn't. But the reality is with sustainability that there are many things that are giving an immediate payback. You just have to look hard for them, and you've got to be more radical with your thinking, and that's what we've done. Just take renewable energy. We've passed the tipping point where it is cheaper if you do it well. And that is undeniable. So anybody who is saying, "Oh no, we're going to wait," you don't need to wait. It is cheaper if you do it correctly, and that's part of the magic of procurement and sustainability working together on this. So we're after that. But I think it's not a free ride in a private company. We have shareholders who care about the financial return, quite rightly, and that's where the compass comes in. So when we launched our Sustainable in a Generation plan with a plan to invest $1 billion to accelerate our progress over the first 3 years, I had to bring a solid business case, based on real cost savings, based on talent factors, talent attraction, retention, and based on growth. And we had a hard-nosed business discussion about the ROI on that. And we came to a conclusion that was somewhere between 400 and 600 million a year in returns, in benefits against that. And it's a good, solid business case. So there's no free ride in a private company either.
Good. Well, so talking about tough choices, I'm going to ask you some questions from the audience. One asks, on the palm oil front, and palm oil, as you say, has been a difficult issue for you. Are there more climate-friendly alternatives to that ingredient? The audience asks.
I think my short answer is no. Palm done well is great for the planet because it's the most productive vegetable oil. Anything else that you would grow to go into all of those different products would have 3 or 4 times the land use, and that's 3 or 4 times the pressure on forests. So if you grow palm in a highly responsible way, which is what we're doing, where it's not driving deforestation, then it's the best thing that you could do.
All right, well, here's another question from the audience, and it's also a procurement question. They ask, how can Mars procurement of cocoa in Africa provide farmers farmers and farm workers a fair wage?
This is an extremely challenging one, and many of the smallholder crops that we buy around the world are grown by the poorest people in the world. That's the reality. The poorest billion people in the world are smallholder farmers. And in many cases, we need to double or triple their incomes to get to a decent standard of living. We've committed to do that, but frankly, it's not an overnight solution. We've made significant progress. We pay premiums. We are driving productivity programs with the farmers, and we've shown we can double their income. But it's still a challenge, and that's why we called our program Sustainable in a Generation, because there isn't a magic wand to solving many of these sort of systemic issues. And it takes years of building a sustainable solution, and just paying more doesn't get you to that sustainable business. We're trying to diversify farmers' incomes. We're trying to work with governments to put support services in place and to create that pathway for smallholder farmers to become successful businessmen. And we've proven that in 4 or 5 different crops around the world now, but lots of work still to do.
So there's so many things that a company has to do these days to be sustainable. There's governance, there's workers, there's, of course, energy, there's farm, there's how you're treating the land. How do you prioritize one item over the other? Do you just look to your shareholders, or do you have to do them all at once?
I think what we've done is really analyzed which are the biggest items that is having the biggest impact on some of those dimensions that you talk about. So we know deforestation, we know we are big agriculture companies, so we know some of the pressure points that is creating. A long time ago, we obviously identified fossil fuel energy that we've done lots of great things on, etc. So we've made a list of priorities, and I think we're really trying to start from where is the biggest impact, and where we have the right solutions. That's got to make sense in any business decision. That's where you have the most impact. Doing all of them at once is always tricky. I also think clearly disclosure and reporting of how you're doing against this alphabet soup of different frameworks out there is really important, but it's hard, particularly at the top of an organization, to try and manage too many metrics. You've got to really focus on where's the biggest impact, and then we go from there. And I think that's what Barry has really helped us set the right set of priorities from a management standpoint, and then recommended that to our board and gained support for that and the investment plans he talked earlier.
And Barry, how do you pick priorities?
Yeah, just maybe give you a few specific examples. There are hundreds of different issues, but we focusing on the big things. It's greenhouse gas footprint. One of them, our greenhouse gas footprint is the size of a small country. We go through the ranking of countries, then we're about the size of Panama. And we've set science-based targets. We're driving down. We've decoupled our growth from our footprint. And that's one of the metrics that our family shareholders hold the board to account to, and the board holds management to account to, and we built into the remuneration of our executives. So they're remunerated on cash and earnings and greenhouse gas footprint. And perhaps the second most challenging topic that we face as a business is plastic packaging. We're in the consumer packaged good industry, which arguably is the consumer plastic packaged goods industry, and most of that packaging is not getting recycled today. So we're in the process of redesigning our packaging, pretty much all of it, and we're lining up the key metric internally for our executives again. That we'll measure them on the progress on redesigning our portfolio over the next 5 years. So, this is where we bring it to life, I think. And where it creates real, where the rubber hits the road and you get real tension between are we investing enough in growing the business, or investing enough in transforming the portfolio?
Right. So you mentioned several times that you tied compensation. When did you start doing that? Do you see a real difference between before and after?
We've already for a few years had some of these metrics embedded in long-term incentives for executives. We've just changed the last 18 months the weighting of all of that. So if you think about these 4 quadrants of our compass, which is about financial returns, growth, societal impact, and trusted partnership, they actually are going to weight 1 quarter each. We're not quite there yet. It's 40-60, but that's where we are headed. I think the combination of that and the realization of where we are at as a planet and as a society is driving the impetus to make a real difference, in our company. And I certainly feel the last 2 to 3 years we have stepped up our efforts, significantly, both in investments but also in outcomes. And palm oil is one of our first shining examples.
Are there ever, obviously you talked about some great examples of win-win, and I do believe that there's a lot of win-win in ESG. Have you ever run across some tough examples where maybe it wasn't win-win, where one or the other was clearly going to have to take a hit to move forward, and how did you resolve that? In other words,
I think back to the packaging topic. We're going to have to invest a lot of money, hundreds of millions of dollars a year over the next years in redesigning our packaging, and in investing in the circular economy, investing behind recycled content, investing behind incentives in that system. And frankly, we're probably not going to get rewarded for that by our customers and consumers in the short term. We hope that in time consumers will recognize the brands that are doing the right thing, but that's extremely challenging at the moment. And I don't think there are many companies, particularly in the consumer goods industry, that are really getting a return from the consumer yet on their sustainability efforts. That's I think you've got to think 10, 15 years and ahead to do that. So yeah, for sure, in the short term, that's going to hurt the financial return, but it's the right thing to do, and it sets us up for the longer term, we think.
Yeah, I think that might be a real example of the difference between a private and a public company. I'm not sure you would be able to I haven't seen the public companies at least making that kind of investment in changing their packaging. So, gentlemen, we only have 2 more minutes left. I just wanted to give you a chance if you felt that there were any points you wanted to make on the challenges of being both financially healthy and sustainably healthy, that you wanted to share with our audience.
Maybe just talk a little bit about. Oh, you go first, Claus. Go on.
Okay. Yeah, it's my turn, Barry. No, I think maybe just picking up on the last point. If I oversimplify, the world of consumer packaged goods, it's been for a long time in all of our upbringing about good quality products, ideally maybe manufactured at scale, and then some really good sales and marketing efforts. I genuinely believe that we need to add the overall societal impact, or call it the ESG agenda, to that equation. And for me, this makes it easier to think about the trade-offs that we need to make. There's tons of things we can decide in a business like ours, of our size, $40 billion in revenue, that cost hundreds of millions. So I think that it's an easy choice to think about how we bring the ESG agenda at the core of our strategy and our resource allocation, and that's going to be good for the planet and good for the future of our business as well. And I'll leave the last 30 seconds for you, Barry.
Thank you. Yeah, no, I think we have some of the answers, but most of these challenges are so big that it's critical we work with others. And I think what you've seen in the last 5 years is really powerful partnerships across the value chain. I spend most of my time working with our peers, competitors on initiatives together, and that's what's going to get us there ultimately. So we need all companies to be thinking the same way, and we see more and more of that, particularly in consumer goods.